Today I'm going to talk to you about crypto's final hope in the United States. That's right, new legislation that's being passed, or at least trying to be passed right now, could spell a significant change in the future of crypto. And it reveals that under the current administration, there is absolutely no future for crypto or its builders in the United States. Now, personally, I am always and remain a massive optimist, especially around the future of crypto, which is so critical to the future of our freedom, to the future of our financial worlds. But it's worth noting that there is a new piece of legislation that could dramatically alter the face of crypto in the United States. Now, I personally believe that not only will this not be passed, or it won't actually take effect and change the course of the industry, but as always, these are huge opportunities to take advantage of. And it makes it very clear that the upcoming election is one that you and I, and literally everyone who cares about crypto, need to be extremely active, proactive, in making sure that this administration is not able to continually destroy the future of finance. American DYDX developer believes that crypto builders should simply give up serving US customers for 5 to 10 years. In fact, they argue that the early stage crypto projects could scale faster by just not serving US customers at all, and they won't have to deal with the hassles of the US regulatory climate. Now, of course, he notes that this does not mean that US policy work is not important. Of course, it's massively important to continue pushing for the most positive policy outcomes for crypto. But he notes that the most important thing is that builders be able to remain in the United States. That's much more important than users for now. There is much more tech/builder talent in the US, much of which will not be willing to leave the US if they're not able to continue building here. Most of all, crypto is aligned with American values. What could be more American and capitalist than a financial system of the people, by the people, and for the people? This is literally what we're building here. America will realize that eventually. And this brings me to the most important point, which is that this industry needs a welcoming home in the United States. Not just critical to crypto holders, not just critical to crypto builders, of which I am both, but it is critical to the future of this country, which is struggling financially. It's struggling with its identity. And one of the key reasons is consistent government overreach, as we've seen on a scale we could never imagine over the past few years. But that's not even the worst thing going on right now. You absolutely have to hear this. This is insane. There are new proposed treasury regulations for crypto asset brokers. Now, normally brokers are things like Charles Schwab or Robinhood or Coinbase, these centralized services which you actually buy and sell regulated assets from. But they're trying to extend that definition to really include any website. And they explicitly characterize various persons involved in DeFi, including operators of websites that communicate with wallets, as brokers. It looks pretty bad. Effectively, what they're trying to say is any website that communicates with wallets, meaning the blockchain at all, could be considered a broker, which is a highly regulated part of the economy. They're trying to treat any website that interacts with the blockchain in any way as if it's Charles Schwab, as if it's a bank, which is not only insane, but it goes against the concept of open, publicly available information, of code, of really the fabric of the internet. But let's dive in here. What they're saying is that many DeFi web apps with US users would need to now track users' profit and loss and issue them a tax statement every year. Disastrous. This could be a devastating blow to the use of peer-to-peer protocols in the United States. It could even sweep in Etherscan, which is of course how we look to see, transaction histories, since it can be used with smart contracts. Again, Etherscan does interface with the actual blockchain. You can send messages, you can actually hit certain functions. It allows you to just generally interact with Ethereum. And that of course makes it a target with this new bill, meaning that Etherscan might need to send every single one of their users a tax form at the end of the year, which would mean they'd have to know all of their sensitive tax information. And finally, and most damning, is that KYC and tax reporting might actually be coming to MetaMask. This would include operators of web apps, AMMs, and potentially even DAOs. Now, I know what you're thinking. Once again, the boomers don't know what they're doing. They don't understand the tech. They just don't get it. They're just passing simple rules. They're simply ignorant. We just got to educate them. And the more we educate them, the more they'll just come around and understand that this is just the silliest rule ever. It's like if you needed to submit your tax information to Google to use a search engine in the 90s. Absolutely ludicrous, right? I mean, right? Well, actually, that might be wrong, as according to Gabriel Shapiro here, the worst thing you could think is that the treasury broker rules are based on tech ignorance. All the little details show otherwise, including hypotheticals that exactly match how DeFi apps work, how MetaMask swaps work, etc. They know how it works, and they don't care. They even went out of their way to say that websites that communicate with a user's wallet and receives revenue from ads, meaning they're not even receiving revenue from the user's wallets, but revenue from ads, meaning these two functions are not connected, protected, well, they can be a broker with tax obligations, which sweeps in Etherscan. This new regulation is coming for the jugular, and effectively, it's the beginning of a step towards waging a war on individual self-custody, on the ability to have any self-custody and self-sovereignty over your own finances. This is the beginning of the way that they try to take down the wall around crypto and make it so that it's fundamentally illegal to transact on the blockchain, which is quite frankly a massive issue. But this isn't just an issue with crypto. This is a policy that is completely rampant across the current presidential administration. And in fact, it's reminiscent of the Bush administration in the early 2000s when we got such things as the Patriot Act and other types of wild government spying overreach. In a new world where everything's digital, privacy is a human right. The ability to have some sovereignty over your finances and your data is absolutely something that we have to be fighting for. And what's clear is that right now we're defining the rules for an entirely new generation of the internet, a new generation of America. And this is a fight that's wildly important. And the current administration has made it very clear on which side they stand. You see here, Biden even recently disregarded his own advisors' recommendations to limit currently infinite warrantless surveillance. Pair this with their anti-privacy tech, their anti-crypto, and their pro-backdoors. Dems now are like Republicans in the early 2000s. Again, this is not just isolated to crypto. This is a policy of controlling all things digital, of having their eyes and ears on everything you do and say, and that is a dystopian nightmare. And like I've said many times before, I am not a fan of either political party. They are both horrifically flawed, and anyone who's dedicated their life to being a career politician is probably an insufferably terrible human being. I believe that to my core. However, right now, what we're seeing is an assault on basic liberties that I think are absolutely necessary. And for that reason, this upcoming presidential election, I think, is really crypto and privacy's only hope to establish some common sense legislation. This is going to be one of the most important moments in history to actually lay the foundation for the next generation of the American economy, and especially for crypto. These are wild times, fairly uncertain in their nature, but I can promise you one thing. This innovation in this field and this industry will find a way. Whether it moves offshore and leaves Americans behind, that's just a tragedy for the average American to not have access to the highest performing best asset class over the last decade and likely what will be the best asset class for the next several decades. That's just a tragedy for the average American. And remember, earning money as a salary is almost impossible to keep up and eventually retire. Check out the video we did a few days ago about how estimates show Gen Z will need $3 to $5 million to retire. And even if you're making $250,000 a year, it's almost impossible to save that up after taxes and life expenses in major cities. No, the game is rigged and we are all financial speculators. You either need to bet on the stock market, real estate, commodities, bonds, cryptocurrency. But either way, you need to speculate on assets to reach retirement. And so having access to assets like Bitcoin, Ethereum, and other cryptocurrencies here in the United States, as well as privacy over our financial world, are basic human rights that we need to protect. And that's why this election will be unlike any other in defining the next chapter of American prosperity. I, for one, am rooting for the USA. If you guys enjoyed this, make sure to click on this video. It's popping up now, and stay tuned because we have some major altcoin gems coming at you hard over the next few weeks. I'm taking full advantage of this crypto dip to stack the absolute best coins in the industry. As always, I'm EllioTrades, and I'll see you soon on the next episode.